Okay, imagine this. You are a real estate investor living in Colombia or Mexico or Brazil or Spain, wherever. A real estate investor is a person who buys property to make money from rent or resale, so rental income or capital appreciation, we say. Maybe you've been watching the US property market for years and you feel ready to buy your first rental property in, say, Miami, Orlando, Texas, wherever. The property market is the buying and selling of houses and apartments. A rental property is a property you buy to rent out and earn income. So you're thinking about this, then you hit a wall. This means you reach a situation where progress stops suddenly. You have no social security number, no US credit score, no American bank account, no US job, you're not a US citizen, you don't have a US visa. It's obviously easy to think there's no way a US bank will give me a mortgage. A mortgage is a long-term loan used to buy property, but you don't need to be a US citizen to qualify for what is called a DSCR loan. To qualify means to meet the requirements for something. You don't need to be a US citizen to qualify for a DSCR loan. Today I'm going to explain exactly what a DSCR loan is, why it exists, how foreign nationals can actually qualify for one, even without US credit scores, social security numbers, visas, or US jobs. And I'll start with the basics, the most important simple ideas from this subject, the basics. Right, a DSCR loan is a debt service coverage ratio loan. That's what the letters stand for. And that sounds complicated, but the idea is actually very simple. DSCR is just a number that shows whether a property's rental income is enough to pay the loan. The rental income is what they are bothered about. This is the most important thing here. Rental income is the money you receive from tenants each month. And the debt service is the total monthly loan payment, including principal, which is the capital, the money the bank gave you, and the interest. So when they're talking about the debt service, they're talking about the money the bank gave you, which is often called the principal, and the interest. You calculate both. In simple words, the bank asks this question: does this property make enough money to pay the mortgage? To cover the mortgage, we say. To cover is to pay for something completely. That's the question the bank asks. Does this property make enough money to cover the mortgage? So the basic DSCR formula, and it is pretty basic, this is how it works. The DSCR is just rental income divided by the monthly loan payment. The rental income is the rent the property generates every month. To generate is to produce or create, in this case, money. And remember, the loan payment or debt service, this is the monthly mortgage payment, capital plus interest, principal plus interest. Principal is just the original amount you borrowed. Interest is the extra money you pay the bank for borrowing this money. So, for example, the property earns $2,000 per month in rent. Think of earns as just receives money. The property earns $2,000 per month in rent. The mortgage payment is $1,600 per month. So the DSCR number is simply 2,000, which is the rent, divided by 1,600. And that comes out at, that adds up to, that equals 1.25. that means the property earns 25% more than what it needs to pay the loan. That extra 25% is what banks call a safety cushion, extra financial protection in case something goes wrong. In case just means if something happens. So that extra 25% is what the banks are looking for. That's what's important to them. A normal mortgage, when you apply for a normal mortgage, the bank focuses on you. They concentrate attention on you. They normally look at your job, your salary, your tax returns. Tax returns are the official documents showing how much tax you paid. And your credit history. This is your past behavior, if you like, with loans and payments. But with a DSCR loan, banks focus on the property, not the person. They ask, does the rent cover the mortgage? Does this deal make sense on paper? When we say make sense on paper, we mean, does it look financially logical when you calculate it? This is why DSCR loans are popular, especially popular with real estate investors, Airbnb owners. An Airbnb owner is someone who rents short-term stays, if you like. Foreign buyers, they're popular with foreign buyers. People with complex income, money that doesn't maybe come from one fixed salary. And entrepreneurs. An entrepreneur is just someone who runs a business. So there is a very common myth. A myth is a widely believed but false idea. And the big myth here is that foreigners can't get US loans. That's wrong. Many foreign investors, they believe you need to be a US citizen to get a mortgage. That's not true. The reality is, you do not need to be a US citizen to qualify for a DSCR loan. It's not as straightforward, it's not as easy as people often think. The eligibility standards vary by lender. Eligibility standards are the rules banks used to decide who qualifies. To vary just means to be different. A lender is a bank or a company that gives loans. Eligibility standards vary by lender. Many banks make it extremely difficult for foreign investors to qualify. On top of that, that means in addition to. On top of that, international buyers face extra hurdles. A hurdle is just an obstacle or a difficulty. Setting up a US business, you need to create or establish a US business. Obviously, you need to transfer money from abroad. Abroad just means in another country. Opening a US bank account, proving income from another country, all of this can slow down a deal, delay a deal, or even block it completely. To block is to stop something from happening. The real problems foreign nationals face, well, we'll go through these one by one, individually. Credit score is the first. Many US lenders will ask for your American credit score. A credit score is just a number showing how reliable, trustworthy you are as a borrower. The borrower is the person who takes the loan. But what if you've never lived in the US? Then you probably have no US credit history. That's your record of past loans and payments, your history, your credit history. So the big question becomes, how can I get a US loan if I don't even have a US credit score? Some modern lenders, they now solve this by reviewing your financial history in your home country. Your financial history is your past money behavior, and your home country, the country you are from. So instead of these banks saying no credit score equals no loan, they look at your international banking and financial records. Your banking records are just documents showing your bank activity. Another issue is identification. official documents that prove who you are, your identification. Standard banks, normal banks if you like, they ask for a social security number. That's a US government ID number or a US passport. But foreign nationals usually don't have either of these. And that doesn't mean the deal is dead in the water. Dead in the water just means completely stuck or impossible. If you don't have a social security number or a US passport, it doesn't mean no. It doesn't mean the deal is dead in the water. Some lenders accept your passport from your home country, your foreign ID documents, and they gather all the relevant information. Relevant just means important for the situation. They gather all the relevant information accordingly. Accordingly means in a way that fits your situation. Then there's the issue of proof of income. This is where people often get confused. DSCR loans are based on the property's performance. Performance in this context means how well something produces money. DSCR loans are based on the property's performance. At this point, people say, well, why does the bank care how I earn my money? Lenders still want to understand where your money comes from, your income source, how you earn money. They still want to see your bank statements. They still want to know what your bank statements look like and whether your income is legal and stable. Stable means consistent, predictable. This is all part of what we call underwriting. Underwriting is just the bank's risk analysis process. Underwriting. They may ask for bank statements, financial statements, official summaries of income and assets, financial statements, proof of income sources, business documents. This helps them build a full picture of your financial situation. To build a picture means to understand clearly. They build a full picture of your financial situation. And there's a very important rule. DSCR loans are usually issued only to businesses, not to individuals. But this is not really a problem. You can form a business. It's called an LLC. An LLC is a limited liability company. It's a legal business structure. A legal structure is the official form of a business. For foreigners, forming an LLC can take months. To form just means to create. You might need to fax documents, mail documents, wait for approvals. Approval just means official permission. This is where many investors get tripped up, get stuck, make mistakes. They get tripped up with this, forming this LLC. But modern platforms now, they allow you to create an LLC and get an EIN. These are all acronyms, but they're fairly simple, fairly basic to understand. An EIN is an employer identification number. It's just a business tax ID. And you can do this in about 20 minutes now, which means you can start buying properties almost immediately, very quickly. Operating a business and buying property in the US requires a US bank account. This isn't really a problem either, operating a business, running a company. Without a US bank account, you can't receive rent, you can't pay expenses, costs, expenses. You can't close on properties. To close in the property market just means to finalize a purchase. Traditionally, foreigners had to fly to the US to open a bank account. But now, some platforms offer digital US bank accounts online that you can open remotely. Remotely, in this case, meaning from another country. And that removes a massive barrier. A barrier is just something that blocks progress. And finally, there's the money transfer situation or problem. Exchange rates change every day. The exchange rate is just how much one currency is worth compared to another. Some countries also limit how much money you can send abroad. Limit, legally restrict. So this can delay your closing date, the day you officially buy the property. And in real estate, delays kill deals. They cause transactions to fail. Delays kill deals. But there are lenders now that partner with currency exchange services. They move money faster. They offer better rates. The rate is just the price of the exchange. And they reduce transfer problems in general. And this helps your deal go through smoothly. To go through in this context means to succeed. Let's step back and look at the big picture. To step back is to look at something more generally. DSCR loans are a game changer for foreign investors. A DSCR loan is powerful because it focuses on the property's cash flow. Cash flow is money left after expenses. DSCR loans don't depend on US jobs, a social security number, a US credit score. They don't need these. The loan allows you to use rental income, business structures, and international financial records. In other words, the property qualifies for the loan, not you. And that's a game changer. That completely changes the game. It completely transforms how something works. DSCR loans are game changers for foreign investors. And that's everything on this subject for today. We'll revisit this, but for today, that's enough. Thank you for listening. This is Listen. Please share, subscribe, and I'll see you in the next episode. Until then, bye-bye for now.